Welcome to Dads and Dollars podcast with your host, Stanley Funches, certified financial planner, business owner, author, speaker, and father of three. Listen as Stanley shares his valuable insights around fatherhood and finances gained from over 20 plus years of experience. You'll hear stories, lessons learned, and the ups and downs he and his guests have encountered on their journeys as fathers, professionals, and business owners. These shared lessons will help provide you a path for financial independence while celebrating the challenges of being a dad. Thank you for joining the conversation. Here's your host, Stanley Funches.
Good day. Welcome to Dads and Dollars, the podcast where the perspective of fatherhood and finances meet everyday life. My name is Stanley Funches. I'm a certified financial planner by profession, a father of three in this thing called life. We're glad that you can join us for season 1, episode 3. Now, on this episode of Dads and Dollars, we would like to welcome our very first guest, my good friend and business colleague, William Taylor Jr. He's a CFP as well as a CPA. William, welcome, and thank you for joining. Dads and Dollars is our very first guest.
I appreciate you. Thanks for the invite.
Yeah, so we met each other over 30 years ago at Tulane University, and I've always admired, your intelligence and determination. And for me, it was a big deal that you got not only your accounting degree in business, but you also got your master's of accounting a year later. And I know I felt it was difficult just to get the finance degree. And so I always admired that part about that for you. So what was your motivation to do both of those, to go that route?
Well, upon deciding to be in the accounting profession, the rules were changing in the late 80s. And there was a movement across the country to require 150 hours. So basically a master's degree to be a CPA. And I had always been told that if you're going to go into accounting or be an accounting major, the CPA is the only option. There are millions of accountants, but there are only few CPAs. And then when you get down to Black CPAs, they represented less than 1% back then, and we represent less than 1% right now. So nothing's really changed. So that master's degree allowed me to make sure I had the opportunity to be at the top of the profession.
Well, it's good. I mean, so I think that goes to your vision as well, right? Thinking ahead of how you wanted to build your career. Did you have any thoughts of, what that 10 to 15 year looked like even back then when we were 23, 24 years old? Did you kind of have a vision for yourself long term?
Well, I knew that I wanted to run a CPA firm. I knew that. I did not know when or how. And then I ended up with an internship at a firm called Katz and Asher in New Orleans. And one of the founding partners told me that the typical CPA started a firm around 41. And he said, you need to make sure that when you turn 41, you don't look like you just started a firm. And it was kind of funny back then, but as I got older, it meant a lot. And then, I got the job with Arthur Anderson. At the time, they were number one in the world before the whole Enron scandal occurred. And that job kind of confirmed to me that I wanted to run a firm or open my own firm. So then it was like, well, okay, I'm 25, 26. I don't know if I'm gonna make it to 41. So I need to go back to what Mr. Asher told me is, okay, when you get to 41, just make sure you don't look like you're just starting a CPA firm. So I left Anderson and went to a regional firm in Georgia and did another 2.5 years, and then decided to go out on my own, 28, 29 years old.
that's really funny that you have that story too, because I always talk about the story of, when we graduated from Tulane, had a finance degree, and I wanted to be in investments because
Right.
Shooty, our finance professor, he just had me mesmerized with investments, and I wanted to be in
Right.
investments. So I interviewed with, and I think it was Morgan Stanley, Dean Witter at the time, in Baton Rouge,
Hmm.
and I always remember this. I sat in front of the guy. It was my second time interviewing with him, and he looks at me. He said, "I really want to hire you." He said, "I like the way you talk. I like what you do. I mean, I just really want to bring you on to this firm." Now, keep in mind, back then, stockbroker back then was not a financial planner. It was more transactional,
Right.
and you had to have a lot of money, and you did a lot of dialing and cold calling if you didn't have
Right.
relationships. And he said to me, he said, here's the reason that I'm hesitant. He said, the first thing, you're more likely to be successful in this business at the age of 30 than you are at 22, 23. He said, so study shows that if we get people in at 30, you're going to more likely be successful. And then this is where he hit me hardest. He said, who do you know? He said, this is the second reason. Who do you know that can lose $50,000 right now? And this is 1992, 93,
Right.
93. He said, who can lose $50,000 right now? And I looked, I mean, I just kind of thought to myself, I said, man, I don't even know who has $50,000, let alone
Right.
who's losing. I'm like,
Right.
and so I left and I'm driving back. And, Vanessa, who I later married, I'm driving back
Right.
and I'm thinking, I'm like, I got to talk to her and tell her that I can't take this job because I don't even know nobody who got $50,000.
Right.
So, but it's amazing that you had that story too, where people say, "Hey, look, when you start off early, you know, how do you progress in your career? Uh,
Right.
your age and experience is a big factor.
Right.
Did you find that waiting a little while that was beneficial for you?
Waiting to open the firm?
Yeah, to open the firm.
Absolutely. Um, when I was at Arthur Anderson, every job, every project, every client was so big that you could never address the whole client. They basically broke them up in puzzles. You got your piece of the puzzle, and you better do the best job you can so that whoever puts that puzzle together, it became a complete product or the best version of a complete product. Well, most people out here, to include the clients I deal with now and the clients you deal with, we deal with the complete product,
Right.
not a piece of it. So the Anderson experience kind of taught me how to make decisions and be creative and combine that with the facts to get my best piece of the puzzle to deliver to my boss and hope it worked. And I hope I got a good evaluation and I was able to progress. But then because one of my bosses knew that I eventually wanted to open a firm, when I was ready to go, he was like, I hope you're not leaving here to go open a firm. You need to go somewhere where you see the whole puzzle from day one. So
Mhm.
that's how I got to the smaller firm. And then I got there and realized, man, I've never really seen a complete situation. So now you have to figure out your skills that are going to allow you to progress at that firm. Well, for me, it was research. I was on the multi-state Nexus team. I was on the research team. We would just do a lot of researching and planning at Anderson to get what we need to make the client happy. Well, when I went to the smaller firm, it was all about compliance. So I had to impress them with research while learning to get the compliance part right. And as I was doing that, I'm like, well, yeah, I need some more work before I get out here and open this firm. And you start learning, and then you realize if you can take both of those worlds and put them together, you're actually a better product than either person in either situation.
Yeah.
So I did that time, tried to hold on to what I got from what I learned at Anderson. And then at some point, again, 2.5 years after that job, and ironically, I was 2.5 years in both places, not planned, but it worked out. Uh, then I went out and said, okay, yeah, I can do my own thing. Let me figure this out. Let me resign, start my own firm, and then piece it all together. And I guess I'm trying to answer your question. Yes, the delay did work because I could see a big picture and a small picture, and then advise or talk to a client about what it can look like, what it looks like for them, and what the best possibilities are and everything in between.
Yeah.
And as long as we're making those steps in between, you as the client better off than the person who only has a research slash consultant or the person who only has a compliance person, because we can put it all together and make something much bigger happen.
Well, yeah, I mean, I think that's awesome. And I think your clients today see that. So your firm today is Taylor CPA firm, right?
Right,
That's your CPA firm. You have clients in Atlanta and Columbus, Georgia. You have offices in Atlanta and Columbus, Georgia. You got clients all
right.
over. Uh,
Yes,
and you work with licensed professionals, and business owners as well.
right.
And so when you talk about putting all of that stuff together, what do you think is the the thing that you would say, hey, here's the value that we want to bring to the table to all these different clients that everybody else can. You putting all this together, you're able to look at both sides, the compliance and the research and all of that stuff, and help them with the consultative part of accounting as well. What is that? What do you think that gives the client that they typically won't get elsewhere in the end for them?
Well, wealth creation. I mean, we can we can take what's there and from a compliance and a research standpoint determine where we want to go, and we can create the situation legally to make that happen. And I don't think a pure consultant or a pure compliance person can actually map out a process of wealth that results in wealth for the family and then adjust the entire way. Uh, there may be an end goal, but we can set parameters to say, okay, we're almost there because of X. This is your cash flow. This is how fast the debt is coming down. We can do these things over here to minimize your tax position. And then we can pull in whatever we need to pull in to get past this next step. And then sometimes if things are tied up, then we could take what's already there and flip it. So a client, if money's tied up or being maximized and we can't go anymore, because of the compliance and the research and the planning side, we may say, okay, well, you're paying rent. Let's flip that rent into a mortgage. Now you own the building for the same amount of money you were paying. So although we're maxed out over here, now we're going to get into this real estate piece. And every month, every year, what you owe on that property is less, and the value may stay the same or increase, but you're creating equity on something that used to be rent. So we can just adjust. We bring that value, and wealth is not a possibility; it's a reality with us.
That's great. That's great. So the podcast is Dads and Dollars. So if
Right.
what I'm thinking about is a young dad or even a middle-aged dad and say, hey, now I want to strike it out on my own in whatever profession. I want to start my own business, and I want to I want to move forward. I want my independence. I don't want to be in an employee relationship anymore. I want to. What are some of the things that you've seen that maybe in those first 2 or 3 years that are mistakes that people make the most? And then what are 2 or 3 things you would, not giving away your secret sauce, but
Hmm.
from a big picture standpoint, maybe one or two things that you would give them and say, hey, maybe they should look at this as opposed to the way their paradigm?
Well, the biggest thing when you decide to make that transition, you're leaving behind a salary. And I think a lot of people overlook the fact that they have to, in whatever they're going to do, their first goal should be to recreate that salary. And a lot of folk run out and, they'll say, oh, I own a business now. Well, you own a glorified job. Let's take that glorified job because initially it's just you and a couple of people. Let's take that glorified job that you own and develop it and develop people to the point where it is now creating something additional. It's giving you back the salary and now it's doing something else. So I think there's too little emphasis placed upon the fact that you're leaving behind a salary to go and start this business. And the focus a lot of time is on everything else except pay. You'll hear people say, I did this X amount of time and I didn't pay myself. Wrong move.
Yeah.
So, I hope I'm answering your question,
Oh, yeah.
but that's one of the biggest mistakes. And then people don't plan. I ran my firm on paper 18 months before I ever opened the doors. Constantly adjusting, constantly having things pop up that I didn't think about the first time, or that some book that back then you bought from Office Depot or Staples that told you how to start a business. Everything's not in there. So if you run it on paper and you run scenarios and you've got these employees and you're growing and it's all on paper, it's all conceptual, you can make adjustments. And I did that for 18 months.
Yeah. Yeah. So you plan for income because the income needs to be replaced, and you plan for your operations and success. You did that. You pre-planned by doing 18 months before. So
Right.
bring another story home for me and how I can relate to what you were saying. So I remember when I started, because you started your firm in 2000, right? I started financial planning in 1998, and essentially, when you're a financial planner, especially where I started, you're an independent contractor. So it's
right.
You're your own quote unquote business owner, right? As
right.
an independent contractor. But I do remember like being 2.5 years in and talking to my mom on the phone, and I don't know what we were talking about. And I don't know how I usually, don't worry them a lot with business or whatever, talk about that. But something must have slipped in our conversation. And I remember her talking to me and saying, baby, are you paying to go to work? because at the time, right, my expenses were far more than what I was making, right?
Right.
So you would try to make enough for that month or two to cover some of those expenses because you had a hurdle rate there. And, and my mom she was like, how are you going to work every day and you paying to go to work? She's like, you sure you okay? But I think to your point is you don't want to pay to go to work. The business needs to work for you. You need to figure out how to make the business work for you. And that's always what I tell my clients is that, hey, as a business owner, we have so many people who think they own a business because they work in their business. They actually are working for their business. But when are you going to transform this so that the business now works for you?
Right.
And so that's a light switch that it took me over a decade to even though I understand numbers, I understand planning, and I did all that stuff, but and even my mom's voice, you paying to go to work.
Right. I'm gonna have to remember that one.
A decade later.
Yeah, I may have to use that on a couple of clients when we're trying to get them to understand a point we're trying to
make. Yeah. So, all right. So today, your clients that you work with, they're business owners and they're growing their business, and I can attest to the fact that that your clients see the value in the services that you provide. What do you think in general, especially after the pandemic, right? The transformations that's happening in the culture, so to speak, with wealth creation.
Mm-hmm.
What do you think is the keys for us to make that a reality? People have a lot of emotions about it now, but
Right.
what can make wealth creation, especially for Black people, other underserved, underrepresented in the financial world people, what can make that
Mm-hmm.
real?
Well, what can make it real?
Yeah, and you can't say Bitcoin.
Well, no, Bitcoin is nowhere in my conversation. I'm not gonna disrespect it, but I don't see it, I don't understand it, and don't have time right
Yeah,
now. Well, plan is the first thing, and then whatever you're going to do, you need to make sure you understand the numbers behind what you're doing. And I guess I'm a bit repetitive when I'm saying running on paper first. And one of my pet peeves is, commit to operating as an organization, not as a business. There's a difference. And we've kind of been hitting on that. And a lot of times we eliminate the term business from our discussion of vocabulary in the firm because it's it's not perceived in the same way as an organization. An organization by default has parts. It has different things that needs to happen. A business can just be you.
yeah,
So if you start thinking of you as an organization, then it changes the process. So I think planning, understanding the numbers, running the business, constantly evaluating the business, and then treating it as an organization. Nothing is guaranteed, but it increases the possibility of creating wealth to such a high level that something good is going to happen. Um, wealth can be the beginning, in between, and the end. It can be all three. But you just kind of have to keep getting there, taking the steps necessary to do it. And again, I hope I'm answering
oh
the
yeah,
question.
yeah, it's wisdom. So
Right.
so like for you, what is some of the personal successes when it comes around money and personal challenges that you've just seen for yourself as a business owner as you've grown? Just a couple of successes, a couple of challenges that you've had to overcome.
Well, I have to say, because of the level of planning and replanning and revisiting the plan that still occurs today, the the money has been there because I put myself in the expenses and operations of the business. So when I'm trying to get to a certain point, I'm already in there. I'm not hoping there's something left and then I get my piece. Um, so the challenges have has been getting people to duplicate my ethic, my process, and my passion towards this thing. So I think growth has been the largest obstacle because when the firm has grown beyond me, I've been able to see it. I've been able to see it coming. But then I have to get that next piece in place, that next person, that next piece of technology, that next piece of furniture and equipment. And that's when, you have to say, okay, now I have to pull from over here to put it over here. Well, then there becomes a bit of sacrifice there. And being disciplined enough to make that sacrifice to get from point C to point D is the obstacle for me. because getting the bills paid has never been an issue because of the amount of effort I put into the plan. And because of my effort, I set my standard and my cost of living. I already know where I am. And I can remember saying, I got to get to $91,000. How long is that going to take? That had nothing to do with a national average or nothing. That was my plan and where I needed to be in my household. Uh, and then as you know, those are successes within the obstacles. And then as you're going down the road, there's always something, some challenge that's going to absorb the money.
Yeah.
It's going to, no matter what it is. And even at the level we are now, I mean, 2 years ago, we knew we had to make a change because of the type clients we deal with. Well, when we looked at what that change would take and the staff people we had on board and the type of equipment we had, that was a $200,000 situation. So now, you know, you're at the bank, you're in the reserve fund, you're doing all this and you hope it's going to work.
Yeah.
It's not for nothing.
Yeah.
So again, the challenges for me has been the next step. It's never been what I'm doing at that time. Here's the next step, it's time. What's it going to take from a human capital standpoint, a money standpoint, meaning surplus, and then the bank? What do they want now? What's it going to take for me to get their money?
Yeah. So what I'm hearing you say, and from my experience of working with so many different business owners, and what I would say the gap is that a lot of people don't have that planning that you have on the front end, right? So
Right.
if somebody's listening to this podcast today, you know, the planning, even 18 months in advance or whatever,
Right.
you know, is necessary, because when you plan and you build yourself into that, you see whether your activity is driving the revenue to
Right.
actually meet your plan. If you don't have that plan in place, you don't know what activity you need to be doing every day or
Right.
what type of organization you need to build to execute that plan.
Right.
So in the present, you're in confusion, right?
Right.
Because you don't have a plan for that moment anyway.
Right.
The opposite for you is in the present, you got a plan for that, and you've already
Right.
planned for that. And so whatever's in the present, you're okay with, because
Right.
it's been in the plan a long time ago. It's
Right.
the future that you're trying to plug and work toward. And that's
Right.
different than most people. Most people just sit in, they're looking around the chaos that's around them because it
Right.
wasn't planned.
Right.
Yeah.
And it's no different than where we are now. I mean, in 2012, I was sitting down talking to myself, and I'm like, by 2015, we're gonna have to make a major move. And 2013, bought some land, and we could afford the land, but then we start designing a building, and I'm like, oh my God, I the building is not because I want it, it's because I need it. Every part of it fits part of the process. And now it's like, okay, well, I'm in 2013. I know where I'm supposed to be in 2015. As I currently stand, I'm good, but I'm not going to be good over there. So what has to happen? I got to pivot. I don't want to add 100 clients. That's a headache. So I have to transition some folk out and transition new clients in that can meet the need. But the people who are here, I need to put them in good hands.
Yeah.
It's not their fault and it's not my fault, but some people are where they are. So you know that they're not going to be able to adjust. In what I mean in layman's terms, they're not going to be able to pay what it takes for us to support them and them to support us on that next move.
Right.
So now I have to not burn a bridge here and start building a new bridge over here. And by always planning and being ready and recognizing those type obstacles, sometimes you get help from those people you ushering out the door because they already know somebody that's where you need to be. So and that's kind of me where I'm okay where I am, but where I'm trying to go, that's the obstacle. And now, how do we make those adjustments? And it's not can we, it's like how and when, not
Right.
can and maybe not. We're not doing that.
Yeah. Again, another parallel, because what I saw my business turn around was probably about 12 years ago. I
Hmm.
was committed to doing a business plan, for not only that upcoming year, but also looking 2 additional years out.
Right,
So every year probably since 2010, I've done a business plan each and every year. Before then, I would do one every 3 or 4 years or whatever.
right,
Uh, but I do it every year, and every year has been some level of growth or clarity in where we were going, right?
right,
Because I know 3 years out of where I want to be, and so I
right,
think again for people who are listening to the podcast, it's like, hey, you're talking to two planners, right?
right,
And two people who deal with numbers. We look at it from a different perspective, but both perspectives are very much needed, right? I'm
right,
more of the finance part of it, the financial planning. You're the accounting, the compliance, the research, the tax savings
right.
part of it. But yeah, so I think that's a great message for everybody. So what we've seen a lot, just from a business owner perspective, I would tell people who want to start a business or know business owners or listen to this podcast is that you got the compliance part and you got the research part, right? And the consulting part. Uh,
Hmm.
what I see a lot is that there's some level of tax compliance that's done that people search out for. And they say,
Right,
hey, I got a good accountant because they are getting the tax compliance part done, meaning they getting their tax return done every year and that's it.
right.
Can you speak to the different levels that you see in the accounting profession, for just the regular old business owner that they should be looking out for at different levels of their business?
Well, when for one, the first thing you're trying to do is break even and just know your numbers. There are people out there for that. But then when you get to that tax liability, they can't quite handle that. And then when you get to that level where you now have liability, from a compliance standpoint, it seems great because there are people helping you manage the liability. You may be paying more than you want to pay, or you may be paying less, but you don't know why. I mean, if somebody's telling you to run out and buy pieces of equipment and write it off every year, yeah, you didn't pay any tax, but there's no money in the bank. So what did you really accomplish other than giving some salesperson selling some equipment or technology a bonus because you dumped the money to not pay tax? And I think when you get to that level, you have to kind of open your eyes. And the only way to open your eyes is to have some focus on wealth creation. And if you open your eyes to that, you can't create wealth if you're not paying tax and you have no money. You can't. So now things have to change. And you step to that level where you're being educated. And one of the things we do is it's like, hey, yeah, we can make that go away. But if we make that go away the way you want to, you won't have any money in the bank. Let's find some middle ground so that you've got some surplus to redeploy. And once you redeploy it, you're going to redeploy it into something that's more tax efficient. So now you got the business running right, the numbers are running, the tax planning is there, the surplus is there, and every new dollar you create is being created in a different area, which has different consequences from a liability standpoint. Is a W 2. subject to 4 taxes in the South. It can be 5 across up above the Mason-Dixon line. It could be 6 or 7 different tax liabilities on that W-2 in a place like New York. But then if you manage to create some profit in the business, that profit may be subject to maybe 3 different types of tax, maximum of 3. So the W-2 went from 4 to 7. The business surplus went to 3 or 4. And then if you take that surplus and redeploy that into some investments, you just limited yourself to 2 forms of taxation. And if you just keep that ball rolling down the hill, which starts with great numbers and a great business, tax compliance, now tax planning, and then wealth planning, you may redeploy that money from the W-2 to the business to the investments to something like full faith and credit of the United States of America, which could be a tax-free municipal bond. Now you're subject to 0 to 1 levels of taxation. And now that thing you set up in the beginning because you didn't want a job and you wanted to go do your own thing, and you also engaged people at every level you needed until you got to that full all-encompassing service that even if it couldn't do something, it's pulling in another organization like TCPA and Intellis Wealth Management. You're getting all the way down the road and you may be paying a tax liability, but you maximizing the type that you pay.
Right. Yeah. Look,
So that, go ahead.
No, you walked through and showed how, what we try to talk to people about is, when you're looking at your financial situation, your business, how do you walk through that wealth creation path? And what you just said was perfect. I mean, I think that's how we try to explain that all accountants and all CPA firms are not created equal. Right? You can have good tax compliance, but are you getting the full suite of services when you get to a certain level?
Right.
Yeah. So I definitely appreciate that. So just kind of segue again. So parallels abound for both of us, right? So this is Dads and Dollars. So talk a little bit about fatherhood. I think one of the things for you and I at this stage in our life, we recently got divorced and became the custodial parents of our kids, which is typically probably not what most people see, but we've done that. Tell me a little bit about, for you, what has been some of the biggest learnings that you've gone through this journey as a businessman and a father?
Well, number one, it's a daily process. There's no blueprint for it, but fatherhood is a business. It's a daily process. You need to plan it. You need to be able to adjust. The obstacles present themselves. My kids are 16 months apart, and I have a boy and a girl. That's two different worlds. No matter how you shake the stick at it. And then as a dad and a sole custodian, I guess single parent. Can I say that now? Single parent. I've learned that just like the business and the client, the kids should be involved in the conversation versus the way it was back in the day. Back in my day, kids were spoken to and not listened to. Nowadays, for me, it's a conversation. And it doesn't mean that I'm giving up anything, but nowadays as a dad, I'm better, I'm more efficient and effective with my children when I'm in a position of leadership and not in a position of dictatorship. So I hope that's making sense. I mean, I need them. I can lead and I got them and I can protect them. But if I'm listening, I need what they have to say so that I can assess and adjust and lead. And if they ever put me in a situation to be a dictator, I already know how to do that. I got grandpas and daddies that show me how to do that. So I'm not, I'm not soft, and I don't believe in the YMCA way of doing things. But leaders can be way more effective than dictators.
Yeah, yeah. So I think that so one of the questions I was going to ask you as well is like, how has fatherhood for you been different than say for your dad and your relationship with your kids? But I think you just explained some of that.
Yeah, I'm more patient. Uh, I don't I I don't advise or guide the family based upon because I know and because I know better. I kind of advise them because I know what happened to me and I see what's out here now. Let's put you in the best situation for success. It's a little bit different. And it's not that the old way didn't put me in a situation for success, because the fear that came out of that relationship is the reason I'm sitting here right now. I mean, there were just fears of, you know, there were certain things you made sure that didn't happen with uh, the opposite sex. There were certain things you made sure that didn't happen with the fellas when you out and the parents couldn't see where you were and what you were doing. There was a fear aspect to it.
Yeah,
And now it's a little different. There needs to be a let me develop you to be a leader aspect to it. And this is what leaders do.
yeah.
Not what children do, but this is what leaders do. And when you get stuck, I can help you adjust, if that makes sense.
Oh yeah, yeah. And it's a trust thing, right?
Right,
Like, hey, look, so trust is earned and it's lost very quickly. That's one of the
right,
things I tell my kids. Like, look, I'm give you this, and this is my trust for you,
right,
right? I mean, I believe in you, but you can lose that, and it's
right.
hard to regain trust. So I think that goes
Absolutely.
to that leadership part that you were talking about. Uh,
Right,
so I think when you look at you said boy, girl, 16, you got Megan, right, and you got William.
right.
So how are they different, and how do you relate to them differently?
Well, Megan, Megan's a 15-year-old, William's a 16-year-old. Megan is creative, outgoing, busy, and responsive. Whereas in that same vein, William is detailed, zoomed in, and analytical. Megan is entrepreneurial and a leader. William is more executive like and a leader. Two different things, but both are able to lead in their own ways. Megan is individually functional, but better with groups of people. And I can tell you that William is individually functional with no need for anybody. Man, he can do his own thing. And this is gonna sound the same, but from an athletic standpoint, Megan is an athlete and a scholar, and William is a scholar and an athlete. Both of them gonna get you, but it's gonna be two different approaches. And Williams may take a little more time than Megan's. And then I guess to finish up and not get long-winded, because I try to think of things in categories. Megan has lots of friends and can remain effective, whereas William needs fewer friends to remain effective.
I got
So they're two different people, uh, and they approach things from different ways. And again, I guess the creative way is to say Megan is just out there and all over the place, and the situation with William, he's right here and assessing what's out there. Megan gonna go out there and just go from one thing to the next until she can master something. Just two different things, man. And that's why I have to leave because you can't be a dictator with two totally different people.
Right, because it's different sets of
Can't.
rules.
Right.
It,
So
yeah,
I have to lead. So favoritism moves based upon what's best for the family at that time.
yeah,
So William may get left out of one problem because I need Megan's problem to be the more important one because it's better for the family at that time. And then may get left out because I need his problem to be dealt with or be the priority because it's better for the family at that time. And they remember that.
yeah.
Later on, they're like, aha, I remember when this happened. So I can apply that to my situation this time because it's gonna help it get resolved a lot faster. And I've seen it happen. So uh not perfect, but for my house, that's what works.
Right, and so I think that one of the things that I think about all the time is how we call it the modern day dad, the 21st century dad, of what we
Right,
are versus my father, my grandfather. The evolution of us as black dads is hey, look, it used to be that traditional role where you say, hey, dad's gonna go to work. He's there as a protector and provider.
right,
And we still have all of those things, right? We're still a
right,
protector and provider, but we're more in tune with our kids and their personalities and their needs on an emotional level and what they need from us and our presence in their life.
right,
More, and I got a lot from my dad with that. My dad, to a certain extent, he understood that he needed to be present in a way that I don't know if a lot of dads got it in his generation.
right.
And so that carried on for me, and it sounds like the same has been for you too. So what would be
Right.
some of the things that you would tell, the younger dad, the younger Will Taylor, now if you could go back, what would be like one thing you would tell him? Maybe somebody can grab from this podcast.
Man, that's a kind of that's a hard question. Um, I would probably say think first and respond second. Because as dads, we respond, we fix. I mean, we're fixers. If I could go back and be a young me, I would sit back and let it break a little bit more and be thinking about it and watch how everything is falling and then fix it, but make sure that everyone understands what's being fixed. Unless it was super urgent, but then we would have experience for them to know that, well, they're not in it this time. I got to fix it, but then I can come back and say, this is what happened. And y'all are going to have to do this one day. Talk about, money more. It's kind of weird, but you got to talk about money. You need to develop a set of policies that work for you so you can take care of the family. But then you have to discuss that in detail with your kids. You can't say money don't grow on trees. You need to get in the conversation. So, like in my house, we have the entrepreneurial spirit. One thing entrepreneurs do is they mess up a whole lot of money a whole lot of times. So I'm not gonna sit there and just tell them this is what you have to do to make it work. I want that entrepreneurial spirit, and now when you mess up, I sit down and talk to you about it. So like my kids had free reign with money. Whatever money I give them, they had free reign. But because I think now before I respond, they knew a long time ago to save and invest. Those are two different things. And then to when you splurge, make sure if you over splurge, you know you got the savings back there to go fix it before the whole world see that it's a problem and start judging you. So I think for a young dad, think first, respond second. Get into the detailed money conversation with kids, not the typical, again, money don't grow on trees. That's all you need to know. Are you doing this too much? Are you doing that? And then dig a little bit. Let them run the conversation periodically on something other than a football or a basketball game or some Marvel Comics movie you just went to see. Let them run the conversation on an issue with some friends or an issue they see on TV. Or if you have those political kids, let them run that conversation. Now, I've seen some parents, some friends that you and I have, the kids run the political conversation and the parents know something, learn something. So I think just get more down into the weeds is the conversation with the young dad. And don't let everything you do be just for adults.
Yeah.
Kids are super smart. And I mean, they're super, super smart. They just may not have the experience to apply those smarts, but trust me, they know. And they know a lot. And it helps when you get them involved. Because then they also, like, I've had my kids tell me they did not do something because they knew from experience with me that I would not be happy about it. That's a whole different level of conversation.
Exactly.
And Dad, I was about to do this, but I know how you feel about it, so I didn't do it. But I was about to do it. I was about to. You don't get there when you run a dictatorship.
No.
Damn it. Right. So to sum it up, the young dad, be a leader and not a dictator, and then apply those leadership skills to the kids.
Man, that's awesome, man. So, the big thing with Dads and Dollars, and we appreciate your time here sharing your wealth of experience when it comes to business as well as fatherhood. Because one of the things I'd say about this podcast is that we want to be the podcast of what, you got the influencers, you got the creators, you got, all these people who, educators who are out here having podcasts, but we want to be the experience of podcasts, meaning that, we've lived it, or we've seen other people lived it. So let's talk about what we've lived. And we appreciate you coming on and talking about what you lived, how you built your business, how you're raising your kids. And thank you so much for your time. We'll put William's information in the show notes. So his contact information, if you want to reach out to him, and his firm, Taylor CPA, located in Atlanta, Georgia, as well as Columbus, Georgia. He helps clients throughout the country. And I know he works with licensed professionals, but you can give their firm a call. They do great work. And we'll put their information in the show notes. So William Taylor, thank you so much for your time.
Thank you. I appreciate the invite.
All right. Until next time on Dads and Dollars, we'll talk to you soon.
Thank you for joining us for this episode of Dads and Dollars. If you found the information shared today valuable, please share with your friends and family via your social media. If you have a request for a future financial topic for Dads and Dollars, please email us at ask@dadsanddollars.com. For further information on your financial journey, you may purchase The Quest for Financial Independence, 10 areas of your financial planning you should not ignore by visiting our website, dadsanddollars.com. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Individual tax and legal matters should be discussed with your tax or legal professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of these strategies. Investing involves risk, including possible loss of principal. Guests and their companies are not affiliated with or endorsed by LPL Financial or Intellis Advisory Group. Securities offered through LPL Financial, member FINRA, SIPC. Advisory services offered through Intellis Advisory Group, a registered investment advisor. Intellis Advisory Group and Intellis Wealth Management are separate entities from LPL Financial.